But yeah, so diving into the Biora chart here. Yeah, so I mean, I had an order placed. Basically, let's see. Um, what was the low here? On April 1st, when it dropped to the low of that day, it was 67 cents. And so I basically, following that day, like let's see, the close was 73.53. I'm not sure what I placed an order, and then, the price kept going up. And so I was like, fine, I'll just have my order filled at like 75 cents or something like that. And then sure enough, like the day after price goes down, could have gotten cheaper shares. But I don't buy too aggressively, so I was just like letting it uh, you know, see what happens. I'll add more later. And then because it had this low of 67 cents, I was just like, okay, cool. And then I'll just place an order at 67 cents, wait for it to get filled. And yeah, it got filled on Friday because there was the low of 66.10. And yeah, I mean, I feel like this is just like, regardless of whether it's like, I imagine that's by increasing the float, is that effectively a reverse split? Because they're just more shares, so you'd own. Yeah, that's effectively like a 1 to 2 or so reverse split. Um, and so with that, let's see. Yeah, I mean, I feel like this is part of the process, and just like for the time being, I'm not being like super aggressive. Like, but I should say, when price was trading over here, I was not aggressive enough, and I should have been, especially when like I saw it break out here and test that before going up. I should have been a lot more aggressive here. Now it's probably, I mean, let's see, let's look at this. So this was like bleeding, let's say, just like from the beginning of that downtrend to like right before it broke out. That was over the course of a little over a month. And so, but yeah, I mean, that included like all of this bleeding. So let's see. I mean, this could be like, it's probably like, it's like 3 months basically, a little over 3 months. So I feel like we could see prices going sideways for what, how long would it be to get to that yellow line? That's 129 days. So I think it's a little extreme. Yeah, I haven't been too engaged with them until there was like the news about the approval for trials and stuff, and that got me really excited. There's a big move, in the after hours and stuff, and seeing this move here, I feel like it's just inevitable. And looking at this big move, my average I think right now is around 160. But I could have trimmed here and taken not necessarily profit, but just trimmed a little bit to then buy back lower if in case that did happen. And I didn't do it. It wouldn't have been many shares because I do sell covered calls. So usually at strikes, probably like $2 or $2.50. And if those get filled, I make money. If they don't get filled, if they don't close in the money, then I'm still holding the shares, and that's fine. And so I just feel like, I mean, for me, I'm excited about the news of partnerships. I wonder if like Pfizer could be one of them. I think that would be pretty huge news. And yeah, and they've got like the clinical trials going on now that I feel like are going well. It seemed like they're going well. And yeah, I don't know. I'm just intrigued by the technology. So, I mean, I feel like now is a time like to either add a little bit here and there while it's low. But also, I mean, it could be going down to 50 cents. I feel like 50 cents is, a psychological level for this. So I definitely think price could be going down there. But like, I just wouldn't be too aggressive with additions, and just try to, it might be a few months down here and maybe there'd be a big rally. But then, the thing that sucks about this rally is, price goes up a bunch. I was expecting it to be holding here. Like this was like the lows behind us. Now we're making new lower lows. So, I mean, if it does shoot up and then you get in the money or your average is lower than whatever the price is, it might be a good idea to trim some, and then if it does dip again, you can buy back. Or if it doesn't, you still got some to hold on to. And so, like, for me, I just plan on holding this, for the year, unless my covered calls close in the money. But I have enough shares that I'm not too worried about that. And I kind of like stagger my covered calls. So I think they're always monthly. So we can actually look at this. Usually, like, their options chain kind of sucks because it's monthly, and since it's below $1, um, let's see, this is puts. So I want to look at calls. Yeah, like to sell a covered call, it's you get nothing for it, and it's in 5 cent increments. That'd be like $5 per covered call. And so I just place orders, like limit orders, if the covered call with a strike of 250 goes to $5. I sell or loan out, 100 shares as a covered call, and then I just get a little bit of money for those. And so with April 19th coming up this Friday, these are all probably going to be zero, but May 19th is the next one. It's quite possible $2 could go up to 5 cents, which would be $5 per covered call per contract. Or then there's also July. I've sold one for July with a strike of 250, and I might have been for $10 or 10 cents at the time. So that's definitely something to consider if you do have a lot of shares. Whatever your average is, just look for uh, call options, and then sell, covered calls. That's just like go in here, and I don't have my account logged in here, so I don't know if I can do anything with this. But yeah, you basically just go to this to sell a covered call, and you just place a limit order for 5 cents. You get $5 for that. And then if it closes on July 19th above 250, you have to sell your shares for $2.50. If it's below, you get your shares back, and you can do the same thing again. And so I've just been doing that for like the past at least year with Biora. And so it's been a nice way to make a little bit of money.